Hello traders. So this is a video that I do every single year on the channel, and it is what I've learned from trading funded accounts in 2024. I've done this the previous 2 years, and I'm going to continue the tradition on the channel and do one for 2024. And it was an interesting year for prop firms. I feel like the whole scene has changed. Prop firms have changed their rules. Traders have had to change their approach to fit the rules, and I think it's been a positive, also a negative for the trader. So I'm going to go through my year, how I've adapted my trading, how I've traded with different prop firms, with the change of rules, with firms shutting down, and my approach going into 2025. But before we do get into the content, I just want to say, if you want to learn how I trade and get prop firm payouts like some of the mentorship members here, including a $140,000 overall payouts with FTMO, which is insane, and that is one of many payouts that the mentorship members have had over the past year. With that out of the way, let's get into the start of 2024. So if you have been subscribed to the channel since the start of 2024, you most likely have seen the series that I created. I think it was February, March time, and it was the $0 to $100,000 payout challenge, trading solely from prop firm funded accounts. The premise of this challenge was relatively simple. I was going to start with one account and try and scale it by purchasing multiple challenge accounts, getting those to the funded stage, and then getting payouts that exceed $100,000 in 1 year. That was the goal. Did I do it? No. And there are many reasons why that actually happened and why I'm most likely going to continue that series in 2025 if the conditions do fit my current trading style. So I had a total spend of $800 for the challenge accounts I had at the time, and I had a total amount of payouts of $28,000. So I'd made a profit of around $27,000 in that series within the first 3 episodes, which was great. But then the worst case scenario happened. The challenge accounts I actually had, the firm shut down. And this wasn't great. I was very lucky to receive a payout of around $5,000 the week before one of the firms shut down, which was very, very lucky. And I was actually around $100,000 payouts with that firm alone in the past 2 years, which was great. And I thought the firm was going perfectly well. But then all these firms, they seem good from looking in, from outside looking in. But when you realize that they can be around this week and completely disappear next week, it kind of makes it hard to commit to a prop firm in your mind. It makes it hard to commit to hours and hours and hours of trading a challenge, multiple phases, to then get onto the funded stage, to then lose the account basically because they couldn't manage their money. They were doing too many offers. And this is obviously some of the reasons why most prop firms fail. They're just not very good at managing their liquidity. After this happened, and I've had it every single year that I've been trading with prop firms since I turned 18. In 2021, I had a prop firm shut down as soon as I got my first payout, but they only paid out 25%. In 2022, we obviously had one of the biggest prop firms in the industry shut down, which I was also funded with. And then in 2023, we had numerous prop firms shut down, probably following in the aftermath of, some of the big ones in the industry shutting down too. And they're realizing that it wasn't as sustainable as they might have first thought. And then 2024, my favorite prop firm at the time shut down, and I had a lot of payouts with this firm, but it just showed that no matter how confident you are, it can all still go terribly, terribly wrong. So after a month of doing this series, and with that specific style of trading that I was doing, people often say that the way I trade prop firm challenges is very risky, and it's probably too risky. But the reason I trade like that is very, very simple. Let's say you were a trader in my shoes. So you were acting as me for the year. If you had a few £100,000 in capital to deploy into the markets or into prop firms, considering the risk versus the reward to both of those options, the best option is obviously to do both. To put 6 figures into the markets with live capital, personal capital, and also dedicate 5, 10K to prop firm challenges. And many traders don't see it like this. They'll often see it as try and keep an account for as long as possible, get slow, consistent payouts. And this is obviously the way that I'd advise most people to trade with prop firms, because they don't have the available capital and the free time and basically the opportunity cost to actually go into prop firms with higher risk setups. And that's how most people should do it, especially if you are spending a larger proportion of your net worth on a single challenge in comparison to what I would be spending. So let's say I spend $500 on a prop firm challenge of $100,000. There are many, many options for way cheaper challenges nowadays, but that's probably the industry average, $499 or in that sort of range. Let's say I pass phase one, I pass phase two, but I'm risking 3-4% per trade. Obviously, I only have 2 or 3 trades, and if I lose those trades, I then hit the daily loss or the max loss overall. And this is something I'm completely okay with. I've failed many challenges in my lifetime, but I've also had massive payouts. I've had payouts of 25,000, 20,000, numerous in the $20,000 to $25,000 range. So if you think about that, $20,000 in one payout, I would have to fail 50 challenges for that to be a net negative based on my bank account. And let's say I've had numerous payouts of over $100,000, $100,000 with one firm. So total, let's say, to make it an easy number, 150K. Let's say I got 150K in payouts, which I probably have more, but 150K just for the sake of the argument, and each one like a 100K account. It's obviously not accounting for the refunds, which obviously would take into account 500 coming back into my account every single time, but we're not going to list that. 150K in payouts, I would have to fail 300 challenges for that to be a net negative. Considering each one is $500, I'd have to fail 300. So the people commenting and slating people online for saying, why are you using higher risk setups? You passed in an hour, but what was your risk? Well, obviously, if I'm passing a prop firm in an hour or in one trade, then I'm using a higher risk setup. I'm waiting for a perfect setup, an A+ setup, and going all in on that trade. The way I see it is if a prop firm allows a 5% daily loss, I'm going to use that 5% daily loss. I'm going to scale into my positions. I'm going to maximize every single dollar that I can on any position I am in. People don't like to hear this, and the way I trade probably does bankrupt prop firms. It sounds silly, but if many people that are good traders like myself go into prop firms with the same mindset of treating it as a business and not a long-term trading account, then that is why they go bankrupt. And the reason I treat the accounts like this is very, very simple. Like I said at the start, these prop firms could be gone next week. They could be gone next month or even next year. You just don't know. Unless it is one of the most well-established firms in the industry, which we all know, anything can happen. So why would I want to compound the account or slowly withdraw small amounts from the account when I can go in, get big payouts and get out? And then use that money once it's actually hit my bank account to invest it into index funds or into stocks or crypto or my own personal trading account, which I've been doing for the past year. You guys have probably seen my WillssFX book. I am currently on a losing streak. So people are probably going to comment saying, oh, why are you losing this month? But I've been focusing more on trading my own live capital, more of a long-term approach. So for the middle part of the year, so for 6 months between March and October, let's say 6-7 months, I don't think I really even traded prop firms. I might have bought a challenge here or there, but it hadn't really been my main priority. And the main reason behind this was, like I said, growing my personal account and building a track record. The reason I'm building a track record is later down the line, I obviously want to go into managing private capital. And you can't do that by saying, look, here's a prop firm payout I had from 6 months ago. It doesn't really stand up because, like I said, anyone can risk 4% on a challenge, pass, and then get a payout. Are you going to be able to trade consistently for 12 months, 24 months? That's a completely different picture. So by building an account that makes 1 or 2% per month consistently, I was able to grow an account, in the first 10 months of the year from March to December by around 14-15%. And you're probably thinking, so you're risking 4% on a trade in a prop firm, but you're only making 15% in 10 months on your own personal account. What happened? But the reason is, if I'm trading a prop firm that I know I have a drawdown limit, I know I have a profit target, and I know that if I'm still on the challenge phase, I'm earning $0 for the work I'm putting in, then why am I going to spend the majority of my time trading this account? It's very stupid in my opinion. So the more time you're on a challenge phase, the more work you're doing for free, basically. And the more time you have that goes past towards the firm closing down. That's the way I look at it. The more time I spend on a challenge, the closer I am to never getting a payout. People will see it differently. People will disagree with me, but that's my opinion and that's how I see prop firms. So coming into the end of the year now, I posted a few live trading videos over the past few weeks, starting in December, and I'm kind of back trading with prop firms. The main reason is I feel like I can make the most of the opportunities that are still out there with prop firms. I might have to adjust my trading style slightly. I've noticed a lot of major firms in the industry are very particular with the risk that you're using. So risk I feel like is subjective, because someone risking 3% on a trade, it could be a setup that they know has an 85% win rate. So the likelihood of that losing is very, very slim. And they know that the majority of the time it does win, so they are able to risk slightly more on the trade. So if you're that sort of person, then you are okay with risking more. But if you're a person with a 30% win rate, you're risking 3% per trade, then it's going to end in a disaster. People don't realize that if you go down 50% in drawdown, then you have to make 100% profit to get back to break even. But people don't realize this. They think, oh, if I'm down 5%, I only have to make 5% back to go into break even. But that's not the case. Your account balance is now down 5%, so you have to make considerably more to get back to break even. When I'm risking a certain amount on my live accounts versus prop firms, it's taken into consideration the setups that I'm taking. They're different setups. One's intraday, one's a swing trade, one's higher time frame. There are many different variables that go into a single trade that I take. So when a prop firm says you're only able to risk 1% per position, so does that mean that if I'm trading on a 4-hour time frame, for example, and I have a TP that's 400 pips, price goes 200 pips, reverses slightly, I'm still in profit, but the initial position is risk free, for example. I then scale into that position, so the total risk is 1%, but my lot size has doubled. So on that position, I'm technically, instead of 20 lots, I'm now 40 lots in, and prop firms don't like this. They don't like you making money, basically. So scaling into positions, even if the first position is risk free or you trailed your stop, they're not too favorable about this style. And I scale into a lot of my positions. I've seen many firms, they don't like you placing a trade without a stop loss. Majority of times when I trade, I press buy on market execution, then I add the stop loss after. I know a lot of people do this too, but that can get you banned. The way I'm going forward with prop firms is checking ones that actually fit my trading style. So many people go in blindly to a prop firm they see with the best offer possible, but they don't look at the rules, the drawdown, the profit targets, the consistency rules, whatever they have in place. You need to make sure it fits your trading style. In my opinion, it's better to spend more on a challenge that fits your style rather than cheap out on one that you have a higher likelihood of failing in the first place. That's just the way I see it. And obviously I'm going to have to adapt my style slightly. I'm not going to be able to go in with 40 lots on a 100k account like I used to do, but that's fine. Nothing's going to be the same forever. And many firms have obviously had to shut down because their rules were too lenient. So I would rather a firm that has slightly stricter rules, but the likelihood of them paying me out is relatively high. I'd rather that than a firm that is really cheap. They have pretty lackluster rule set, but the likelihood of them finding a reason to not pay me out is relatively high. I don't want that. I want the reassurance that I'm going to be paid out if I'm spending hundreds of pounds and many, many hours of my time. That's the main thing. Spending hours of time. Some people trading prop firms won't have the amount of free time that I personally have. So it makes it even more important to someone that isn't in a fortunate position when they are trading with prop firms and they don't receive their payout. 2025, the main thing I'm focusing on is my personal account and trading prop firms alongside. The main reason I'm doing it is to create content for you guys. I'm going to show you the true reality of trading prop firm challenges with a slightly more aggressive approach. So if I blow the account, I blow the account. I'm going to show you anyway. And the reason behind this is I feel like there's such a lack of transparency on YouTube in the trading industry. Everyone just posts wins, wins, wins. And I'm not going to lie, I was guilty of this in the past few years, and I have a valid reason. I would do a video saying how to deal with losses, or I lost a trade, or videos like this, and they just wouldn't get views because people weren't interested in watching someone lose money when they could watch someone that only posts wins and watch them make money. It doesn't make sense. Why would you want to watch someone lose? And I feel like the main reason behind it is that they don't want to see losing a possible outcome for their trading. So the traders that only want to see it as a get rich quick and they only want to see the wins are not the ones that are going to succeed. They're not the ones that are actually in trading for the right reasons, and they won't be here in 5 years. It's as simple as that. But those that are actually watching me lose trades, they're watching how I manage positions even though I'm losing, I feel like those are the people that I want to help. And those are the ones that will be here in 5 years and hopefully we'll be winning together. So, like I said, there's a mentorship link in the description, and I'll catch you guys in the next video.